Are you ready?
I'm ready.
All right, guys, we're back and we are inside, ready to answer some of the one-on-ones and tough questions. Andy, are you ready?
I'm as ready as I'm going to get, Josh.
All right. So, one of the most common things I find when people are searching for homes is obviously interest rates. Interest rates are at 6.5, interest rates are at 7. How do people keep up with the interest rate, and what is a good source to use to keep your eye on the market?
Well, I like to use a site called Mortgage News Daily. There's an app and it gives you the average mortgage rate
Nice.
in the area, which is nice. And like today, the average 30-year is at 6.25. And then if you're looking at it, usually there's half to 3/4 of a point to save if your budget can
Nice.
tolerate going to a 15-year.
Now, when people really hear about like mortgage rates, it's typically the 30 years that you hear. Now, when you just said 15 years, what do you mean? Tell the people, what's the difference between 15 and 30 years besides some people might not know the difference between even though it's in the name. Can you elaborate a little bit more on that?
Yeah, so most people do a 30-year. That's and a high payment in year. But the payment's obviously going to be higher because you're doing your
Right.
house in half the time. What I like to tell people is if you're not sure you can do the 15-year, you can always finance it at a 30-year note. And then if you make one extra payment per year, you're going to cut down the time of your house loan down 7 years by just making one extra payment a year.
Right. Yeah, that's a really good point. So you have your interest and your principal. A lot of people know that that's combined, and you also have your escrow that's tied into your mortgage rate. But if you do pay into your interest or your principal a little bit quicker, like you alluded to, by putting in just one more payment, if you throw in an extra $1,000, $2,000 a year, that's going to cut your time down significantly. And it's going to decrease your interest that you are paying on every monthly payment. And it's putting more into your principal, more into the equity of your home. So
you're going to save a lot of money in the long run if you can make an extra payment or two a year.
Now, keep going on that same track. Is there any prepayment penalties that you know of?
No, there's not. If you're financing with us, there's not any prepayment penalties. I mean, if you hit the lottery 2 months after signing the note and making your first payment, you can pay it off and and not get penalized. So yeah, no prepayment penalties.
Okay, because there are some people who hook and ladder you in, but they have their fees associated. So, is there anything that you've seen in the market where people are trying to get people through their doors, but there's hidden fees and agendas? Is that typically with third lender parties? And
yeah,
Okay.
A lot of the online lenders will give you teaser rates. They'll say, hey, we're financing at 4.99 right now. Well, they're not telling you that it's the perfect case scenario. The debt to income ratios are perfect. Credit score's perfect.
Yep.
I have not done one deal in my 5 years that's been the same. Not, nobody fits into a box.
Right.
So,
and I agree. Everybody's situation's
different. Yeah.
And when you're saying buy points down, like people are advertising that they have lower rates, but you have to use a big chunk of money in order to buy a rate down. Can you explain buying rates down? Because I know before I got into this business, I never really understood buying points down. Can you kind of tell the people like a 101 basic of what that really means?
Yeah. So if you're using a point on a mortgage loan, that's a percentage of the note. So it's going to cost you generally several $1,000s to save 30 or 40 bucks a month. So there's a break even point there. If there's if we're in a market where inflation's rising and the rates are rising, then a lot of times we'll recommend that.
Then it might make sense.
But as we mentioned earlier, the Fed's predicting that they're going to hopefully keep dropping rates, and generally we don't recommend paying points in a declining market where they're coming down. So
as of now, if somebody's advertising that they're going to buy points down, that might not be as incentivized as it might seem to the average person.
Right, and everybody's case is different. Right. So I recommend getting with a lender that you trust, somebody local, somebody that's going to answer their phone.
Yep.
While you're shopping, or on the evenings and weekends, and discuss your scenario with them, and talk about what makes the most sense for your situation.
Now, something that I didn't really realize when I bought my first home was PMI, private mortgage insurance. I didn't really know what that was until I asked, and that was several years after. Can you tell us what private mortgage insurance is and how to avoid it and when it does make sense to have it?
Yep, it's just a way to protect the lender. It insures the loan in case somebody goes into default. And if you put down less than 20%, then it's required.
Yeah.
Once you pay the note down under the 80% loan to value, it actually drops off if you're in a conventional product.
And that's really good to know because that private mortgage insurance, even though sometimes you might need it because you cannot meet the 20% standard, is good because then you can get your home and start building your dream and your family. But if you can afford it, for my personal recommendation, PMI does not give you any value. It doesn't protect you from anything. It just protects the mortgage lenders.
Right.
So
from default.
From default. Now, something with a third-party lender versus a local lender is the communication process. Going through a loan is never really easy, especially when it comes to underwriting and everything. And buying a home and staying on, a timeline. Personally, I love local lenders. They're easy to talk to. They help through buying the home process. Can you kind of give us a little bit of a horror story, or why somebody should choose a local lender versus a third-party lender when it comes to communication, going through the process, and taking
a lot of time the online lenders, you just can't get a hold of them. So, you might get a week before closing, and all of a sudden they disappear. I personally like to deal with, the realtor that's down the street, that's in the neighborhood, who's got kids in the schools. Somebody that I know I'm going to see on a day-to-day basis, so that they can, so that you can get a hold of them and discuss any issues you're having. So, I had a guy get pre-approved through an online lender on a weekend. Was really pushing them to lock the rate. And they didn't realize, he's like, well, they're beating you payment wise. And I said, well, get the loan estimate so we can see, what you're really paying for. And here they were charging them 2 points that they didn't need to spend. And that's it, and so there was a lot more money out of pocket they were going to have to come to closing with. Case in point, it was, and when they called back, they got a hold of someone else that had to tell them what was going on. You deal with a local lender, you deal with our office, you're going to be dealing with, you're going to be dealing with me or, our loan officer assistant. That's helping me get the loan to the closing table.
And I've worked with clients that had third-party lenders, and it's very confusing, especially when they ask me questions that I don't know their ins and outs. It's very important, and in my opinion, very constructive to have a third party or a local lender where you can call them up anytime to discuss like where we are, what they need, how I can help. And it makes the process so smooth, so stress-free.
Or go see them if you're a face-to-face person.
And,
so
if you
want to go meet at the office, or you want to go have a lunch and talk about your situation, that I'm a face-to-face person myself. So,
and you come to some of our closings that we've had, congratulate them for reaching the finish line, thanking them for their business and everything. It's a very intimate process. Buying a house is not easy. That's why all these, businesses are set up for this process. So,
and you want somebody that can be there after closing. If you got questions down the road.
Good point.
You want to be able to get a hold of the realtor. You want to be able to get a hold of the lender if there's a question about.
And it always happens.
Anything going on. So,
now to wrap it up, what was I going to say? So, with determining whether to buy now or wait, if the rates do drop in the next few years, what is kind of your threshold point to start refinancing? So say we lock in a rate at 6.5. Now, when you refinance, it's not just, you snap your fingers and you get to go to that new rate. You have to go through an appraisal process. You have to go through another, loan application. Can you talk us through that and when it makes sense to do that? Because if somebody does want to buy now because they found their forever home, but are waiting for mortgage rates to drop, please enlighten us on when that would make sense.
So we like to tell people that if it drops a point, so if you're at
Okay.
6.5 and you see rates drop under 5.5, then the savings seems to be worthwhile to us.
Okay.
And we can do those payments. But you do have to pay title fees. As Josh said, you do have to pay an appraisal. Sometimes the appraisal can be waived. It just depends on the neighborhood, depends on the situation, depends on how much the house has gone up in value. Hopefully the house has gone up in value.
Sure.
So, there's a point there where, depending on how much you put down, the mortgage insurance could drop off if the house has gone up in value. But some of those fees you can roll into the loan. So, I mean, if you're paying a little bit to do the refinance, there will be a break-even point there. So if you're staying in the house and you're forever home, we can tell you when that break-even point's going to be with the reduced payments.
Awesome. Well, again, Josh Schneider, your Tri-State Realtor, Andy McGee, our local lender. I'm licensed in Ohio, Kentucky, and Indiana, and so is he. So if you're looking for a home in the Tri-State area, you're not sure whether to pull the trigger or not, give us a call. We can talk through your personal situation, figure out if this timing is right for you or not. We'll walk through everything that we just discussed or any other questions you may have for us. I'll leave Andy's information at the end of this video, so feel free to give either one of us a call anytime. We'd be happy to help you.
Yep. Any questions you have, give us a ring.
Yep. Sayonara. Looking forward to hearing from you.
Thank you.
All right. I think that went okay.
Yeah, I think so.
I think
we didn't stumble too much.
No, and I feel like it was pretty fluid.
Yeah.
I feel like it's going to be kind of dry, but if somebody really wants to look,